Hello, good evening from London. Running behind schedule, but important thing is that we're here and that I'm here to deliver some big news. Especially today, we are looking at the double digits that we continue to see and have seen over the course of recent years when it comes to rental prices. And I just want to share a little bit more about that, what's driving it, but also, most importantly, we have rental report, market update from Zoopla, HomeLet, and Rightmove, which is always a good indication as to where the market's heading for the next quarter. So I'm excited to share this with you as we go along. As always, I want to make sure that everyone can hear me first of all on audio, and obviously see me would be great as well. And I'm just really eager to dive straight in to some of the reports. So, as some of you have been following what we do on a kind of weekly basis on the live, we have been focusing, of course, on the most recent news with Labour, with the Renters' Right Bill. Last week was a heavy one, definitely sort of diving through Section 21, landlords' reactions, and definitely sort of where the market's heading. And we are waiting for that budget to come up in October. But again, for today, let's go ahead and dive into some of these uh, articles. So first up is no end in sight for rental stock shortage to run into 2025. So the title of our live stream today is very much with regards to rental crisis, is definitely going to run into 2025. What rental crisis am I referring to? Well, we're talking about the lack of stock available, and this could be, as we know, influenced by mostly, I would say, by politics, regulations, tax, landlords leaving the market, but also there is an element of just the natural market, especially when it comes to mortgage rates and risk factors. So there is an element of that we'll look in today, but let's jump in again to this article where we can dive in deep and dissect when it comes to no end in sight rental stock shortage going into 2025. So the huge imbalance between supply and demand in the private sector will continue into 2025, says Zoopla. It says that the demand for rented houses has slowed as one pandemic factors first start to fade, and lower mortgage rates help some renters buy their first home. So there is some easing there, the demand at least. And of course, this is going to vary from region to region. But I definitely agree, as the lower mortgage comes into place, then those first time buyers can sort of make those numbers work, as it were. And that is definitely something that impacts the market. But to what extent and in which regions? Because if we know, of course, London, where prices are relatively high, there's going to be a less amount of that. But of course, we do know that Mum and Dad Bank are helping a lot of Londoners, for those who do have those resources, of course. So, changes to visa rules appear likely to reduce migration for study and work. Despite a softening labour market, rental demand is likely to run at above average levels for the remainder of 2024, with rents expected to be 3% to 4% higher by the end of 2024. So, given that we are talking about Zoopla, let's jump into that, and dive deep into the most recent report, which I always find interesting when we factor in and look at both Rightmove, Zoopla, and HomeLet. Before I do, just want to make sure if there's any questions so far. It seems that you're all keen for me to just jump into this, so no questions for now. So this here, what I'm going to share is the Zoopla market report for September. I believe it just came out a few days ago. It's talking about the rental market. Rental inflation is slowing, with London and major cities leading the way. So we always knew this even from last year, that London was going certainly to be slower than other regions, simply because London accelerated when it came to, and led the way when it came to rental hikes. So naturally, with every boom, there is going to be a slowdown or a bust. I don't believe this is necessarily a bust in any way. And just to clarify things, uh, we are talking about a slowdown here. We are no way talking about prices going down. There is seems to be no indication of rental prices going down, especially when we look at especially when we look at that we have less stock available now, 24% less to be exact, now uh, available in the rental market than what we had pre-pandemic. That's a huge number. That's a quarter of properties, and we have more demand. Although it's interesting to see that article showing that there is an element of demand slowing down based on visa regulations, both from a student standpoint but also from um, a labor slowing down as well. So I'm curious to sort of jump into that a little bit more. But for now, going back into the Zoopla report, slowing down. So we know that London and major cities are slowing down. However, towns and rural areas are continuing to see rent rises. Find out what's happening. Okay, cool. So if we go straight into UK rental inflation and we look at the lowest, it's been the lowest now for what it's been for the last 3 years. Now, looking at this graph, we've got July 2024, region and city, percentage change, average rent. So here we have a percentage change positive, and it's showing us from the highest to the bottom. So I've been hearing some great news when it comes to Belfast in terms of house prices, although it seems to be going up quite quickly. We had actually a chap on live a couple of weeks ago saying that prices in Belfast, house prices in Belfast, were actually increasing after somewhat stagnant years. But this is specifically interesting to see that 10%, 10%, that's a double figure in Belfast percentage wise change. And if we look at Newcastle, 8.8, Liverpool, Southampton, Edinburgh, for those brave landlords. I say brave landlords because um, what we do know from Scotland, our northern cousins, is that indeed it's a tough market there when it comes to regulations. It seems that they are very much landlord unfriendly. But then again, who is landlord friendly these days? We've got Bristol. I love Bristol in terms from an investment point of view. Very close to London. You've got Birmingham, and London is nowhere to be seen here in terms of the top 15 property, or sorry, regions of increasing on rent inflation, which again is interesting, especially when we factor in to the south and north divide, which we'll be looking into very shortly as well. So UK excluding London, 6.7%. If we look at UK as a whole, we can see this 5%. What I find curious every time when I look at the regions is that it very much there's a pattern whereby the south and the north, both from a house price point of view, but also from a rental price point of view, seems to be doing the same thing. It seems that London is much slower in terms of rental and house price growth right now, at least, in comparison to the north. So obviously, even if the north has a lot of activity, given that sort of flat rate from London now, most recently the rental price is becoming quite flat. Then it starts to level out. So of course, if we have like a 9% or 8% as an example in the north, but we have a 2 or 3% here in London, then what happens is then you start to see those figures sort of leveling up around 5% throughout the UK. But when you go a little deeper, and for those of you who do invest in property will know that property is very much hyper local, then it starts to tell a different story, which is so important. Why? When you look at the media and what they say, what's happening with prices, and they look at the overall UK, or England for that matter of fact, it's so important that you then dive in a little bit more and unpack the information that's there. I hope that makes sense, guys. Just looking here in terms of questions, let's take a few questions before we dive in a little bit more. The current rental market is extremely competitive with 21 applicants per property. Are there any regions where rental price increases are less severe? So yeah, Jonathan, I think if we go on by what we've seen on Zoopla report, we can see that the London market seems to be slower than anything else. But of course, even London itself, if we look at it as a whole, is a huge market, and you could be seeing things that are happening differently from a neighborhood in South London to a neighborhood in prime London to another neighborhood in North London. So they can be doing different things. So just to keep that in mind. But overall, it does seem that London seems to be leading the way when it comes to this slowdown. So less severe. I hope that answers your question. And we'll also look at applicants per property, which Zoopla has provided us, and other stats that we have per property right now, at least over the course of the last quarter. So, Stephen, with all the new regulations, it seems that landlords are facing more pressure. Are these policies partly responsible for the rising rents? For sure, I would say so, Stephen. I would say they definitely have an impact on the rental industry. What we do know, and if just so you don't miss it, there is a video coming out this weekend which talks about the regulations and, in particular, the new bill announced by Labour, which of course is the repackaged and rebranded renters reform, now called the Renters' Rights Bill. And what we do know is that this does spook landlords, and it has a huge impact on landlords' decisions, whether it is property investors growing the portfolio, whether it is entering into the market, or whether it is very much exiting the market, which is what we've been seeing over the course of several years, which haven't been at the back exclusively on the bill, which was announced initially by the Conservative Party back in 2019 by Theresa May, if I'm not mistaken. And they made a lot of noise about it for a period of 5 years and delivered, of course, as we know, absolutely nothing at all. And then we've had Labour jump in, and the very first few weeks have put it through and announced it already. So put it through published here with Parliament. So I know that there is a debate scheduled on the 9th of October. So for those of you who are interested in that, make sure you do subscribe to the channel because we are updating on a weekly basis. Anyway, I am digressing here ever so slightly, but it is all relevant with regards to your question, Stephen, which is absolutely, it does have an impact. And it has been having an impact even prior to 2019 with Theresa May. So it had an impact back in 2016 with our friend George Osborne announcing, of course, the stamp duty surcharge for second homes with the removal of the wear and tear. But most specifically, of course, the most damaging one, which continues to be the biggest challenge for most landlords out there, was the Section 24. So the removal of being able to offset the interest costs from your mortgage, which would have been a big blow, but it's been specifically even more painful now than when it was implemented. And the only reason for that is because of the mortgage rates that went through the roof in the last sort of couple of years. So that Section 24, of course, combined with higher interest rates, it's just a recipe for more pain for landlords. That being said, I don't want to be sort of the person to be here and giving you bad news. There are good news out there. A lot of landlords are making the numbers work. You just need to have the right structure, and of course, buying at the right time, buying the right property, and the numbers are working. We've seen a lot of landlords buying properties, specifically those landlords who have more than 3 properties in their portfolio. When you look at landlords who have properties in their limited company, again, having the right structure. There don't necessarily have to be 100 properties in there. Some landlords have a limited company, have 4 or 5 properties. Those are the landlords that actually are scaling up and actually making the most of the current opportunities that are coming up. I hope that makes sense, guys. Samantha, I know you have a question here, and I will revert back to you, but I am digressing ever, and I want to jump into this Zoopla report so we can go through it. But I promise I will come back to you shortly. So I'm hoping you can see my screen again when it comes to this map with Zoopla. So Zoopla is showing, of course, the increases. Now, the biggest one looking at Belfast, of course, the furthest up north with the highest, and then you've got northeast at 9%, which is great, 6%, and then the further down you come, or at least here in southeast, and we can look at London, we're looking at a 2.5% increase. But these are more normal numbers, and I wouldn't scoff at these numbers. And even these highest ones that you can see here, they will gradually start to come down. From an investment point of view, of course, you need to be careful as to what regions you're investing, because you don't want to be chasing purely on a yield point of view. So UK rent rises slow to the lowest level in 3 years. UK are now rising at half the rate seen in 2023. But of course, these were more abnormal markets. And this is a good thing, guys, if you're a landlord. And of course, if you're a tenant, rates, double-digit rates consistently over the course of years is going to be damaging to the market, I promise, for both landlords and tenants. It will pave the way for governments to come in and put in even more regulations, believe it or not. If it continues at this rate, we won't have anyone who can afford these rental properties. So the market always has a way to correct itself, and that's what we're seeing at the moment. It's just simply not sustainable. Rent inflation is currently at 5.4%, compared with a 10% last year, taking it its lowest in 3 years. Rent rises are slowing, but higher levels of demand from renters combined with a lack of rental property available mean rental inflation isn't dropping as quickly as consumer prices and earnings. The supply and demand imbalance is starting to narrow, but there's still a long way to go. So demand and supply are starting to narrow, much further to go. So if you've got 23% on rent demand, if we look at this, let me have a look here. 68%. More affordable locations are continuing to see rents rise. We had predicted this year for those regions that rents continue to be reasonable. We knew that those were the ones that were going to have the greatest growth. However, in larger cities where renters are already reaching the limits of what they can afford to pay, inflation is decelerating. But this in turn is having the effect of pushing up rents in neighboring markets. And this is what we call, guys, the ripple effect. So whenever you have, whether it's house prices or rental prices, and you have kind of this peak that suddenly happens, then naturally it will have a ripple effect in neighboring regions and also markets. And we see this all the time, whether that's been in a confined area like London, and you have neighborhoods that are shooting up, and then you see the other neighborhoods, or whether it's regions having that knock-on effect. That includes, by the way, whether it's house prices or even rental prices. So, Samantha, I know that you have been here waiting for this question to be answered. Let's see. It feels like first-time buyers are being squeezed out. If the market is the rental market discouraging people from purchasing their first-time home, Danny? I don't think it's the rental price is discouraging people, to be honest with you. If anything, it's encouraging people to buy the first time home. The challenge you have, Samantha, is that with mortgage rates where they are, and depending where the region you are as well, like in London, then it's not much of a choice for most renters. As much as they want to be able to buy a home, they don't see it viable, at least for the foreseeable future. So what we have seen is a shift in the mindset of a lot of of the younger generation, just coming to terms with, you know what, uh, owning my own home is no longer a priority. If you look at the generation which do have means to buy property investment, I definitely know that there is a more of a trend of knowing that they can build wealth with property investment and investing in property, and yet their home is not a home that they own. They choose to rent a property and be able to move back and forth as they wish and still be able to grow wealth with investing elsewhere. I hope that makes sense. So let's see here with Jonathan. Daniel, keep hearing about landlords leaving the market. This has impacted availability of rental properties. Yeah, absolutely. But again, we need to be very careful, Jonathan, as to who exactly is leaving the market. I definitely know that it is the smaller landlords. So landlords sort of have up to three properties that have it in the old structure. I call it old, but certainly that have it in the personal name. The Section 24 and taxes is just no longer viable. Perhaps they didn't enter the market to own sort of several properties to begin with, and just find the whole regulation and legislation and taxes just far too much and decide to invest elsewhere. Yes, there continues to be an element of landlords leaving the market, and that will continue to happen for sure, especially as we get more news of the bill, the renters' right bill, and also the budget coming out at the point of, I think it's end of next week. So, guys, if you're just joining us, please do remember to subscribe. We do have a debate of the new bill scheduled on the 9th, which we'll be sharing very soon. So, what should policymakers focus on to address this shortage? As I feel that rental stock is projected to remain low into 2025. So, great question. And in fact, um, the what's his name? I can't remember, but one of the leaders of an organizer that does that advocates for renters and tenants, he made this very clear. He said that the bill was somewhat a step in the right direction for tenants and renters, and yet the underlying issue isn't the regulation to impose on landlords. The underlying issue, in fact, is the shortage of properties. That's really um, what's delivering kind of the rental crisis that we're seeing and the housing crisis just in general. We can't expect landlords to fix the housing problem and the rental crisis that we're seeing. What was the take? What was your take on the current rental crisis pushing first-time buyers further away from purchasing homes? Um, yeah, I mean, there is truth to that. If rental prices are all time high, um, there is an element where they're going to have less income and less money to save up for deposit monies to be able to get onto the property ladder. But again, that's only a small fraction of the problem. We have high prices because the stock level is just not there. If the market was just suddenly flooded with properties and listings for sale, whether that's new build or otherwise, I promise you it will keep prices in check. That's not happening. The stock is just simply not there, and it will continue to keep the prices in check. And that's an issue that we've had in the UK for a very long time. But to answer your question, wise, there is truth in the matter, whereby they can't save enough money for a deposit. Okay, but Danny, will these incentives encourage landlords to stay in the buy-to-let sector during these challenging times? I'm not sure which incentive you refer to, Leslie. Um, so I can't speak to that. So if you're talking about incentives, maybe being the rental prices increase, and whether that's going to be enough to keep landlords in the buy-to-let sector, I would say so. I mean, there was a survey done by, I think it was Paragon Bank, as to what was keeping landlords inside the actual rental market. And it was interesting to see that one of the key reasons was, let me share it with you actually. I have it here. I think this will be a great opportunity to share this with you. Okay. So, what keeps landlords in the buy to let market? So, this is going to answer your question, Leslie. So, based on this article coming out a couple of weeks ago, a new survey appears to lift the lid on why landlords remain in buy to let, despite the tax regulatory controls now making the sector so challenging. Because it's a fair question, right? Like, you got regulations, you got taxes, you got mortgage rates at the highest level than ever before. You got the entry to property investment, the highest of world house prices, sort of, still being extremely high, especially when you look at London. And then you think to yourself, well, why is it that landlords insist on staying in the market? Well, here's the answer. Paragon Bank surveys 500 landlords, okay, with up to 3 properties and with declared ambitions to build larger portfolio. Long-term rental demand, 6 in 10 landlords, 60% cited the ongoing demand for rental properties as a key factor in the decision growth. So this is also, by the way, guys, looking at the bigger picture, this is the key driver, not only for landlords that have properties up to 3 properties. This is also corporations and investment funds entering the market. And this is not only in the UK. I mean, if we look at sort of John Lewis, we have insurance companies, we have banks wanting or very much being landlords now with build to rent. But you also got external overseas corporations and investment funds investing here in the UK because they see that there is this ongoing demand. And that will continue to grow for, for different factors, different reasons. So I just wanted to make a point on that because it's important to note that these big corporations also sort of see the potential. So retirement income, over half landlords, 54% are looking to add properties to their portfolios as a means of supplementing their retirement income. Capital appreciation, nearly half of respondents, 47% believe that long-term house prices growth is significant driver for the investments decisions. And of course, that for me makes a lot of sense because a lot of people do chase the yields, but ultimately where you're always going to win is that capital growth. So continue to buy sort of in places like London. And I know I'm going to get a lot of comments probably on this. I was like, London, really? London performing so poorly. But London always delivers. Yes, it may be slow. Maybe London doesn't do anything for 10, 12 years, which is pretty much where we are now. But it suddenly just really just takes off. And I believe that long property is a long-term investment. And if you hang in there for enough time, especially when it comes to places like London, you won't be disappointed. But if you're in it for sort of a quick buck, there are places that can tailor for that as well. So, preference for property over further land, or 34% prefer property as an investment asset over other options. Now, why is that? So the rental market is set for continued growth driven by projected populations increases around 10% over the next decade. So we do know, if anything, I mean, if you heard me sort of a few times, I bang on about half the population being in major cities or in urban areas. That's half the current population. That's around about 4 billion, if my numbers are correct, with sort of around about 8 billion a population across the world. 4 billion of those are in urban areas, and that is set to double in terms of size for those urban areas. So in 2050. So in 2050, we can expect 8 billion people living in urban areas. That, of course, is an opportunity that we're seeing a lot of investors, especially those investment funds, trying to make the most of. So let me see what other questions we have here before I continue on this. Actually, on that same note, on the article we just saw, so one of the reasons that a lot of people do prefer to have property investment as opposed to other sorts of investment is inheritance, being able to pass that down. It's a tangible investment. And also, it's flexible. You can move into it. You could do short lets if you wanted to. And of course, all of these are going to become a little bit more challenging. Yet there is a flexibility to it when compared to, example, shares. Shares you have absolutely no control. You either own it or you sell it. That's it. So going back to Jonathan, will government policies on rent, control policies help stabilize prices, or would they risk further reducing rental supply? Well, it's an interesting question. I mean, I guess the best way I can share uh, my answer with you is another article I have here. Uh, Rental bidding wars, rent gaps. Okay, this is probably not the one. Steep landlord exodus tough. Okay, so probably this article. So landlord exodus tough new rules spark mass sell-off. So to answer your question there, a mass sell-off is currently underway in the landlord sector, and it only looks set to increase. EPC requirements, the renters reform bill, and mounting financial pressures, the list reasons go on and on and on. No doubt you've seen the recent headline, and if you're a landlord yourself, you'll be forgiven for thinking that the worst is yet to come. In fact, the property market continues to deliver tough news for landlords. Labour's plans are ramping up what can only be described as a final blow to landlords. And again, listen, guys, there is an element of scaremongering on this. There is truth to all of this. Of course, this is serious. Regulation are changing. The game is changing. But how much of this is truly going to impact landlords? For those landlords that comply, not very much. It just means that the industry is being more professionalized. I don't see that as a bad thing. I don't want to dive too much into this in terms of regulation because that's not the purpose of this particular live stream. But again, if you're not subscribed, make sure you do, and do look out for the next video that's out in the next few days of the weekend, which will dive more into this as to what these new rules means for landlords. Okay, so measures that could prevent landlords from evicting tenants who fail to pay. So I hope this answers your question, Leslie. So yes, a lot of landlords will continue to be spooked by capital gains tax, by new regulations, the removal of Section 21. What truly is going to happen is for those landlords who continue to grow their portfolio, they're just going to be more selective as to who they choose to enter into their property investments. References are going to become so much more tighter, and unfortunately, it's going to impact in a negative way those very people who the government claims to be protecting, uh, and especially those who don't have the correct financial referencing, who perhaps do not have evidence of a rent history. And it just becomes a little bit challenging. And again, really, the people who are going to be impacted negatively, yes, some landlords, but I don't see many really. I mean, those landlords who do feel they're going to be impacted exit the market. Unfortunately, a renter can't, and a renter, I believe, is going to be the one that's going to be impacted the most. I'm going to jump in back into the Zoopla report to stick and stay true to the current live stream, which is about rental inflation and supply. So rental inflation taking time to moderate, as we can see here. Potential tax changes undermine rental supply. So, a scarcity of supply has been an ongoing feature of rental market for the last 3 years. There are now 18% more rental homes available than this time last year, as lower mortgage rates enable some renters to exit the rental market to buy their first properties. So, again, it also have an impact, which is great. That being said, we see that there are still 24%, that's a quarter, less homes available than before the pandemic, which is limiting choice for renters. There has been a steady flow of landlords selling for the last few years. And the number of formerly rented homes for sale increased to 12.5% of all homes for sale. I'll repeat that. And the number of formerly rented homes for sale increased to 12.5% of all homes for sale in July. Listen, the reality is that what's going to fill in that gap if because they'll be playing catch up, and it won't be sort of in the short term. It's of course going to be those corporate landlords, and especially those buy the build to rent and those property funds. They will eventually catch up and fill in the gaps of those smaller landlords selling up. But in the meantime, in that short term period, the question is what's going to happen with these renters who very much need affordable rental properties. And it could be, but I think this is a global problem. What I was going to say was it could be that London, I'm thinking about London as a capital, but London may not be as attractive as it once was if rental prices sort of are at a rate whereby it's no longer viable for people to come to London and make the most of the city. Why even come if you're going to be struggling? Um, so there's been a study. So speculation over possible tax changes, as we know, impacting landlords. We know that we have that budget coming up at the end of October. Demand weakening off for a very high basis. Demand for renting has cooled over 2024, but remains high by pre-pandemic standards. The chart below shows the number of inquiries per rented home each month over the last 5 years. Okay, so number of inquiries, and then we look at over the course of I'm just trying to figure out. Okay, yeah, so 2022, 2023, 2024, 2019, 2020, 2021. So you can see sort of during this period that was quite a high number, and then it's kind of just slowing down ever so slightly over the course of these years. If you look at this yellow one here, look, this has peaked up here to almost 50. That's huge. Let's look at 2024. So obviously we're at the month of August and just reaching here, but way below this 2022 and what I believe is 2023 by the looks at it. So this is the yellow one is the one where it peaked the most, 2022, when it came to the number of inquiries. And I remember um, that even up to last year, the number of inquiries and offers coming in for one single property is crazy. I would see listings being put on the market and taken off within hours because of the amount of inquiries coming in. They already have sort of 20 viewings booked in. Why even keep the property on the market? And I feel for those renters who had to endure that period of time. It couldn't have been easy. And again, it's not sustainable, guys. But, the buy to let market continues to show a healthy aspect in terms of that demand, rental prices increasing. And if you can make the numbers work, and most people could, depending on the structure that you have, it continues to be very viable. So the post-pandemic period saw demand for rented homes rising to record highs, which together with falling supply pushed rents higher. Rental demand started to rise quickly over the last half of 2021. As the economy reopened, this accelerated over 2022 with the resumption of international travel alongside changes in visa rules for workers and students as time when the UK jobs were also strong. Talking about travel and visas and everything else and the market opening up, there's another factor as well to take into consideration here, which is as the market opened up and with those mortgage rates suddenly shooting up, a lot of landlords also started to pivot and be creative in how the use of their property investments. And a lot of them did, of course, try out short-term rentals. And with the platforms of Airbnb and Booking.com being trending and continue to trend, that seemed to be a viable option for them to be able to pay those mortgage rates that suddenly doubled and even tripled overnight. And that continues to be attractive to landlords. And of course, that does a couple of things, but most importantly, it moves away the stock from the long term rental sector. And what we do know from the government is they are going to do everything in their power to curve that, limit that, and make it perhaps more the level field it sort of more leveled up when it comes to long let and short let rental, which is why they've removed, of course, the 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 lettings holiday furniture, if I've labeled that correctly, and also removed, of course, the fact that you could offset the cost of mortgage rates. It just didn't seem fair to you can have it for the long let, well, you can't apply it for the long let, but you could do short let. So it's the government trying to kind of level that out. And I promise you, we can see more developments on the short term rental and sort of curving from the government in the next few months to come. So, again, if you're not subscribed, do subscribe to the channel as we share more of this information as it comes in. So, rental demand to remain above average. There has been a clear step down in rental demand over the 2024. Visa rules for students and workers have also been tightened and are likely to reduce levels of net migration, although the scale of change is unclear. The competition for rental properties is still running at twice the pre-pandemic levels. Okay. Cities recording slower rental growth. London and other major cities across the UK have been leading the slowdown in rental inflation. So we know this, we've gone through this, but perhaps, major cities leading the slowdown in inflation. You've got London City here, 2.5. So it's the one leading the way when it comes to that slowdown. Following that, we've got our core city outside London, other city, large town, medium. Okay, it's not telling us exactly which ones they are, but you've seen the other graphs. New lets leading measure of rental inflation, new lets, and so forth. So, guys, I hope that this is helpful in understanding and seeing the rental prices, the lack of supply, the continued demand going on. And this is somewhat helpful for you landlords or renters that are online, so you can make informed decisions moving forward. Uh, let's jump into any other questions that we may have. Danny, I'm thinking of buy to let. Can you please guide if for renters, are there any benefits to the slight easing in demand, or will the competition remain tough? This helps me understand the market. The competition will continue to be tough for renters, at least for the foreseeable future, Andrew. Of course, at some point, it may slow down substantially, but I think we are definitely far off from that. Whenever you think about property, Andrew, I don't know if you're an experienced landlord or just coming into the market, and I know renters really hate me saying this, but you got to look at buy to let as a business. It is a property investment, and it's a long-term property investment. So when you look at your numbers, just because you're having one bad year or two bad years, you need to look at it overall. 5 years, 10 years. Because I've had so many landlords who had a good run for a good 10 years. They enjoyed cheap money. They were profitable, and then suddenly, when mortgage rates went up and they were sort of, let's say, hitting even, let's say. And or even negative, and they were suddenly saying this is not worth their while. Well, you had 10 years of a good run. You might have a couple of years, dare I say, a little bit more of breaking even, but hang in there, because it will go. The numbers will start to work again. Just make sure you look at the figures, speak to an accountant, speak to tax experts, speak to a property consultant, a mortgage broker, and have a good team to work around you. So yeah, I hope that answered your question, Andrew. Martin, do you know the role of these institutional investors playing in the rental market and how they are influencing the rental prices? So for now, there was a period of time where they were coming quite aggressive in building, but over the last few years has slowed down somewhat. But at the moment, I wouldn't say they're having a huge impact, but they will slowly but surely. That impact will continue to come, and with that, by the way, Martin, it will also come the mindset of the renters as to what they want in a property. So they're going to become more, they're already more demanding, and so should they. They're paying good money. And so these facilities will come with sort of communal areas and will come sort of with, whether that's gyms, access to what things that most other builders may not have. So that's something to take into consideration. So competition wise, landlords, individual landlords really have to up their game as to how they're treating the tenants and what they're providing. Okay, Andrew, you are very welcome. Danny, are there any signs of relief for renters in terms of more affordable housing will becoming available in the near future? Tim, so I think that rental prices will continue to rise for the foreseeable future. My hope is that they will rise in a more sustainable way, because the way that they have been rising is not sustainable. And it's a recipe for disaster for everyone. I don't think there are any winners in the marketplace with that accelerated rate of rental growth. But certainly there is a slowdown, and if the government can deliver on their promise, which unfortunately I don't believe they will, of 1.5 million homes over the course of 5 years, I think they are making the right decisions to get there at some point, with easing planning permissions, and deploying sort of more planners out there to be able to grant applications and so forth, which is very much needed, but it's going to take a while. I hope that helps, Tim. Um, but what I would say is there are other regions of the UK that perhaps are more affordable, and I'll say just make the most of that as you go along. And if you do find a landlord who you're paying rent to, just establish good relationships with them. There is always, this thing that landlords are just cold-hearted investors. Yes, you can be a capitalist, but you can be a capitalist with a heart. I hope that makes sense. Okay, cool. So I wanted to what keeps landlords after a steep prices curve. So this goes on to a few questions that you've asked as well, which is steep house prices curb renters' home buying ambitions. So a third of renters, 33%, don't plan to ever own their own home, up from a fifth, 20% in 2022. A poll of more than 3,000 private renters across the UK reveals that a staggering 80% feel priced out of the housing market, with affordability their primary obstacle. So there's the answer to a lot of your questions with regards to whether, actually, it was the other way round. I was getting the question, which was whether house prices was influencing, rental prices was influencing buyers. But this is, of course, the rental prices is influencing buyers for sure, as they are forced to stay in rental accommodation because of affordability issues. And of course, this is going to be more prominent in places like London, where you have the average house price of, I don't even know what it is, it keeps changing. So the research reveals a significant shift in renter behavior, with affordability and financial pressures pushing aspiration of home ownership further outreach for many, explains Dan, a director from Residential Investor. The north-south divide was also evident in the survey, with 32% stating their rent payments between 400 and 600 per month. However, these respondents were predominantly based in northern areas. Well, this would be a delight for most people, especially in the south, if they were paying 400 to 600 pounds in rent. And then south average 1,000, 1,500. If you're sort of inner London, we know those numbers are going to be in the region of 2,500 pounds. Um, so those house prices definitely having an impact on renters staying in the rental market. Talking about the North and South divide, I think this was a good article to share with you. So supply and demand disparity sees over 20 applicants. Okay, this wasn't the one. But if we're here, we might as well talk about the disparity of applicants. So rental demand is likely to remain above average levels for the remainder of 2024. Rents expected to be up 4% higher than than last year. The latest rate of market, I mean, we already talked about this. So I think this will be um this is going to be repeating ourselves. But there was an article here, guys, that I wanted to share with you, which I found very interesting. Uh, Rental bidding, massive supply and demand mismatch. Here you are. I found this article quite interesting, which is around the same markets. A massive supply demand mismatch still haunts lettings market. So Zoopla reports today that there is a continued mismatch between supply and demand in the private rental sector. Rental growth for new level lets currently stands at 5.4%. Um, and we're going back to repeating the same. Bear with me, guys. I have got a few articles here open. What keeps landlords, rent gaps? This is the one, I promise you. Finally, we got there in the end. So, rent gaps between North and South, smallest over a decade. So, of course, we've got the South North divide, especially when it comes to house prices. But in rental prices, that we saw that as well. We saw was 400 to 600 of those respondents in the last article. And then if we looked at the South, it was something sort of in the region of the thousands, right? 1,000, 1,500. Now, what this report is pointing at is the gap between rents in the north and south of England has closed to its smallest level since at least 2013. So this is a eye opener, especially for those investors who are keen investing in the north and seeing that that gap is closing even more, whilst house prices continue to be quite affordable. Because I know that London is a barrier to entry for many new landlords, at least coming into the market. So, letting agency Hamptons, which has records going back to 2013, says that last month the average new tenancy in the south of England cost £1,300, some 37% more than the north of England, where rents average £960. This gap has narrowed from 43% in August 2023 and down from a peak of 55% in November 2021. So that is those are very interesting numbers. So the gap has also fallen in cash terms over the last year, with the rental growth in north of England running at a nearly twice the pace of homes in the south. Last month, the average rental home in the south cost £357 per month more than one in the north, down from 378 in August 2023. Tenants moving home in the Northeast face the biggest rent hikes across Britain. And if you've been following our channel, you will know that we had predicted this. You didn't have to be a rocket scientist to figure out that the Southeast had seen its peak, and the North had plenty of room to grow, and that's where we are at right now. So let's have a look here. We'll finish this article, guys, and I'll go on to some further questions and then wrap up for the evening. So, after adjusting for the inflation in real terms, rents have only risen 10%. That's 10% across the country since 2019, equating to an average of 2% each year. That's an interesting number I hadn't seen before, by the way. And I think this is hugely informational, um, because I usually see that inflation number in real terms, um, the price in real terms for house prices. But it's interesting to see, and this is something that would be interesting from a landlord perspective, especially when government likes to, put this big figure in front of people and saying, 30% increase over the course of 3, 4 years, which is, by the way, the title of this video. But then when you adjust for inflation in real terms, rent have only risen 10% since 2019, which is at 2% each year. That would be an interesting video actually to publish and to educate people on and dive deep into these numbers because there is an illusion, even for me, you know, rents have increased by X amount. But if we look at inflation, it tells a different story. So, in terms of in real terms, rents in the North England have increased by 24% compared to 10% across the south of England. That is a big number in comparison. I'll repeat that just in case you've missed it. In real terms, rents in the north of England have increased by 24% compared to 10% across the south of England. Rents in Wales -5% have fallen in real terms over the 5-year period. Meanwhile, Greater London rents only just sit in positive territory, having seen 3% real rental growth since 2019. This equates to an average of just 0.2% real rental growth each year in the capital. But, and this is a big but, guys, where you will always win in the capital is going to be in capital growth. And London always delivers in that. And it will be interesting again to do a video on how that's happened over the course of the last 20, 30 years, whereby it suddenly shoots. And that is just very typical of London. You need to sit on the property investment for a period of time. So Anisha Beveridge, head of research, Hampton, says, much like house prices, the rental north-south divide has been closing for the last 5 years. The narrowing reflects the cyclical nature of the housing market, with house prices in the north of England rising 31%, nearly double the southern rate. These figures have been mirrored in the rental market, with rents in the north of the England quickly playing catch up. But it's only been in the last year that gap has really started to narrow beyond the point we've previously seen. This has been driven by the slowing of rental growth across the south in England, caused by greater affordability pressures, while tenants in the south have seen weaker growth in percentage terms. In cash terms, they face big rises. A 10% increase in the south of England rents would cost tenants an extra 1,500 a year, 428 more than for the tenant in the north. So listen, guys, it is going to be 8 o'clock. I have a couple more questions I'm going to answer. If there are any others, please put it through in the next couple of minutes as we do wrap up. But as ever, thank you for joining me. We are sort of joining across different platforms. That being said, this is also recorded. So if you want to review this again, or you are reviewing this as it's recorded, feel free to subscribe and catch us live every Wednesday between sort of 6 and 8 p.m. So, Andrew, throwing too many questions. Do you have an idea if the rental market trends affecting the affordability of housing for students and young professionals in urban areas? Certainly for students. I've even seen the overseas students who have deep pockets being impacted. Some very much sort of changing neighborhoods and the type of buildings that they have. And guys, to put this into perspective, these are tenants who pay 30, 40,000 pounds in advance for the year. And even those tenants have a limit. And we've seen them sort of when the rent increase comes every year, saying, you know what, it's too much for me. We'll move into another building sort of further out where our money can get us more value for money. So as I said, everything has an impact, and even people who have deep pockets have their limits. As per your expert advice, how are the rental crisis influencing demand for co-living spaces and shared accommodation? Well, of course it will. I mean, I think if anything, I don't have any evidence of this, but I think that that sector, if anything, would grow. because as professionals squeeze even more and more, then perhaps sort of living in a one bed flat isn't number one, maybe won't be viable, but number two, may not be the most sensible thing to do. You know, um, especially, I mean, I see young kids working for Facebook, and they are sort of in their sort of early 20s and immediately earning 100 grand. That may sound like a lot of money, but when you're spending 40K on an apartment somewhere sort of in St. Pancras or in central London, that immediately is 40% of your income. And I say 40%, that's before tax. So that is crazy money. Now, some of these people, as much as money as they may have, may decide, well, you know what, co-living may be a better choice for me because I probably want to buy a property in the next 3 years. So it will be interesting to see the impact that's having specifically on the co-living sector. Um, another thing I want to ask is about the remote work patterns. What change are they causing on rental market in the city? That's a great question. And I know obviously during the pandemic and after the pandemic is something that very much had an influence of people moving around. I will say that that should be something that continues to influence the market, that ability to be able to remote work. Um, and people using that to their advantage. I think that perhaps is also one of the reasons the North is doing so well as well. Because I particularly know a lot of professionals who worked here in London, and now actually are up north and come into London to the London office, probably maybe once a month or once a week, if that. And that is something that I feel has helped accelerate those rental prices, but also house prices up north. And this is something, yeah, that's ongoing. So definitely influence for sure. Very informative. Okay, thank you. Okay, guys. Well, thank you very much for joining me as always. And stay safe. And we'll catch you next week between 6 and 8. Otherwise, subscribe and you'll catch the recording. Thank you so much.